Let's bring on board Mr. Prakash Tulsiani, MD at Gujarat Pipavav. Mr. Tulsiani, hi, morning. You've carried on the good performance from the fourth quarter last year into the opening quarter of this year as well. Give us some more color on this and tell us if realizations and margins will have less room to expand if the rupee does appreciate further.
You're right. This quarter has been a very good quarter for us, and the results have been clearly showing that. Considering that we came in from a very good quarter, which was quarter 4 2013, which is our best quarter always in a year, and we have continued with a good set of numbers in terms of volumes. Looking at the currency, that will not affect us much because the currency has not changed significantly. If you see the exchange rate in the last 3 to 4 months, it has remained stable, and we expect that going forward also the currency would remain stable. This is of course a volume game or a game depending on the trade. As and when the power policy will change, we will see actually more coal volumes coming in. Depending on how the monsoon would be, we will see the fertilizer volumes also gaining momentum. In terms of container business, the growth in the market is anywhere in the range of 4 to 6%, while we have grown at 16%. So it depends on how the trade will play out or pan out. Post, we have our election results here, the new government coming in. We have already seen signs of improvement from the US and the Europe trade. So if this trend continues, we should continue to see good numbers.
So going into Q2, or as we roll over into Q2, which is traditionally not a strong quarter for your company, what will happen to container traffic and seasonality, and will it revive in coal volumes, or will it get capped given the current power environment and the fertilizer shipments which have got impacted because of El Nino?
In terms of container business, seasonality will play. Second quarter is comparatively lower than the quarter 4 and quarter 1 that we have. So giving the due play of seasonality, we will see the volume numbers. In terms of bulk business, it's purely dependent on how the power plants perform. How much coal do they import? On top of that, we have been hearing about El Nino and other effects on the monsoon that can have in India. So the urea imports would be dependent on how the monsoon is panning out all over India. So actually, when we enter into the quarter 2, I would say we are looking at the other factors which are external to us to play, and based on that it will determine what will be the coal and the fertilizer volumes that will come in. In terms of container business, as I mentioned, the seasonality will be there, so taking that seasonality effect, we should be fine.
The operating leverage is strong and cost efficiencies as well are kicking in strongly. But are most of the upside triggers for margins such as tariff revision, port traffic growth behind us? Because the global trade data so far this year has been softer than expected.
First of all, if you see our quarter results under review right now, that is quarter 1 for us, you would have seen there is no exchange gain or loss because the currency has remained stable. So that is not first of all included in our EBITDA, because that shows below the line of EBITDA. In terms of EBITDA, as you rightly pointed out, we have done very well in terms of our cost, because our infrastructure, our efficiency is playing out very well, and with the volumes that has increased, we have got the benefits of the cost also. As we continue to utilize our capacity, and we will see the utilization going up, we will see our numbers in terms of cost remaining in the same range as we have seen in this quarter. So going forward, we are not currency dependent right now. Okay. And I would say it is dependent on the volumes. The rates or the rate rationalization which we took in August 2013, that has already taken full effect in quarter 4 last year, which was between October and December, and also in the current quarter under review between January and March, and that should remain steady as we go forward in terms of our tariff.
Your liquid tank farms are ready to commence operations in the current quarter. What kind of volume and revenue contribution can we expect from this new pillar of growth over the years?
The tank farms are ready. for the first phase. Whatever was expected in the first phase, that is ready right now for 2 of the operators out of 3. We are expecting anytime soon we should get also the cargo coming into India and to the port for these tank farm operators. Once they are in steady state, when I say steady state, when the capacity is fully created by these tank farm operators in all their phases, which is spread over a period of 12 to 18 months, then we can get the revenue from the liquid cargo up to 15% of our total. The margins in this particular business are upwards of 60%.
You're a proxy play on the global trade activity, and that has been mixed at best. While pickup from the US has been slower than expected, Europe has been much stronger than China has been particularly weak. With risk of El Nino also looming apart from Indian election outcome, is the second quarter looking more challenging than anticipated?
Indeed correct. It depends, I think, what is the plan of the new government as they come in. What do they deliver in terms of policies? How do they give, boost to the trade? Looking at US and Europe, they are coming out with, better economic numbers, but they are coming up slowly. So that will help our exports out of India into Europe and US. What then matters is that if that goes up, then we also need to bring in raw materials which we bring in from China. And if the consumption pattern in India improves because of the policies as we see in coming up after the government is in place, then we can see also the trade from China going up. Because if India wants to consume, China would be able to supply. So it's dependent on India as far as China trade is concerned. How much do we import for either for our exports or for our own consumption? Difficult to say anything at this stage. We'll have to wait for a few months before we can comment more on this. But right now I can say exports to Europe and US are looking upwards.
Can you give us a peek into your earnings growth outlook over the next 3 quarters as you have revised your capex plan? And are there multiple business factors to watch out for on the horizon?
First of all, we'll have to wait and see how India does, as we go along post the new government in place. So to give any numbers for the future would be difficult at this stage. I think we should discuss this once again once we have seen what the policies are of the new government as they go forward. What I can say is that we have a good product on hand. We have a very good connectivity. We are efficient port. We have a right infrastructure. And we are confident of delivering the margins that we have shown on EBITDA levels going forward. Definitely volume dependent. We are dependent on the trade, and we are, as I said, cautiously optimistic going forward. And if the business continues or the volumes continue the way they are, we'll continue to deliver the results as we have done currently.
I appreciate your time and thank you for joining us.